Welcome back. You're still watching Business Lunch on CNBC TV 18. The going is still quite good, actually. In the broader markets, a couple of stocks deserve mention. SRF is firing higher this afternoon, up almost 10% posted numbers that came in. And a couple of these pharma stocks, whether it's Dr. Lal Path Labs, Ipca Laboratories, and, a couple of the smaller ones as well, looking pretty good this afternoon. And real estate is the other space. Oberoi Realty, Godrej Properties, etc. are making a bit of a comeback right now. But let's talk about the big stock of the last 24 hours. Jubilant Foods continues to be in focus. The stock is under pressure after the Jubilant Group promoters, in a late-night statement to the exchanges, said they are withdrawing the royalty plan. Prashant Nair is here with all the details. Prashant.
I think there are three reasons why there is still pressure on the Jubilant Foodworks stock. The first is pretty obvious that, it didn't go through, but it was tried in the first place. The promoters trying to get their hands on the cash flow via a royalty, which was unwarranted, which would have been extremely difficult to justify. The fact that it was tried, it leaves, I think, sentiment a bit dented. The second point is that, it just leaves you wondering whether the promoter is going to use some other route to try and get their, to essentially achieve the same thing, which is get more out of Jubilant Foodworks for them. Is it going to be a higher dividend payout? Is it going to be something else? One doesn't know, but it leaves people wondering. And the third reason is, I think, not being discussed that much, but it could be a pretty significant part of why the stock is still under pressure. People are wondering whether the promoter group at Jubilant is extremely leveraged. What was the extent of promoter debt which forced their hand to do something like this? Because, to most people, this move seemed pretty illogical. Why would you try and do something like this and cause the kind of market cap damage that we saw? And we don't have data. A couple of these companies of the family are listed, but many are not. They're into oil and gas and other capital-intensive businesses as well. So we don't have hard numbers at this point in time to say, well, this is the extent of the promoter debt, and this is how much their backs are against the wall. So that is another unknown. The third unknown, which I think is keeping the stock under pressure. We'll continue to dig and provide some more clarity on that third point, which is important. But one thing I just want to leave you with, unlike the recent instances like Z, etc., where a large percentage of the promoter holding was pledged, only 18% of the 45% that the promoters hold in Jubilant Food, for example, is pledged. Only 18%, 1/8. So if the requirement for cash is high, the pledging can go up to a full 100% of their holding. So that room is still there. So in that one sense, the issue here with regards to promoter debt, which we don't know the extent of, is not very similar to some of the other recent cases we've seen. Back to you.
All right. Thanks so much, Prashant, for putting all that into perspective. But from stock specific, let's move on to some macros then. And the Reserve Bank of India's monetary policy is due tomorrow. Our colleague Ritu Singh is right here with the expectations. Ritu, tell us, is it going to be a status quo is what people are expecting?
Well, logic demands that when you have a budget which promises to boost consumption, the Reserve Bank of India should go into a tightening mode. But that is not something that we should see from the Reserve Bank of India, given how benign inflation has been in the last few months. So 90% of the respondents that we actually polled believe that it will be a status quo policy, as the RBI will refrain from a cut also this time around, given some of the fiscal pressures and the fact that crude prices have been inching up. But there is 100% of the economists that we polled expect a change in the stance of the RBI from calibrated tightening to at least neutral, which will then take them to further rate cuts. And 50% expect at least one, 25 basis point rate cut in this entire calendar year, and another 50% expect two rate cuts of 25 basis points each until December. No action is expected as far as the CRR tool is concerned. Economists don't really expect RBI to use this just yet. On the macro parameters, GDP forecast is largely expected to remain unchanged by 60% of those we polled at 7.4% for this financial year. And for the first half of next year, where RBI pegged it at 7.5%, that, many expect will be lowered, given that the government itself is also now projecting a 7.5% growth for FY20. And the first half is typically expected to be slightly slower, and therefore that revision is expected. Now, on the CPI front, there have been 6 revisions in the last 1 year from RBI. This time time around, the majority expected to remain unchanged, at least as far as the second half projection for this financial year is concerned. For the first half of next year, 80% are expecting that will also be left unchanged as the RBI, watches for more data that will emerge. The tone of the policy, of course, now, that inflation has been below about 2.19% in the last reading, below 4% for several months in a row. They do expect RBI to sound more dovish, but yes, overall, it'll be an important statement to watch out for also because it is Shakti Kanta Das's maiden policy.
Oh, yes. All eyes are going to be on that. Thanks, Ritu, for giving us the expectations on what comes out tomorrow. There's a change in timing. Let's see if there's a change in stance as well. But on to a CNBC TV 18 exclusive. Sources tell CNBC TV 18 that NTPC is looking to acquire assets outside of India. What could the quantum of these assets be? Anshu Sharma joins in to give us more details on that. Anshu, over to you.
As CNBC TV 18 reported that NTPC will look at growth via brownfield projects in India, now we learn that NTPC is looking at expanding its global footprint. We understand that NTPC is looking for solar power project in Africa, which could be about 1,000 megawatt under the International Solar Alliance. Now, this International Solar Alliance is something which was pushed by India to bring in countries to boost renewable energy in those specific countries. Now, we also understand that NTPC is looking for gas-based projects in Gulf countries, and in Morocco specifically it is looking at hydro, coal and gas-based power projects. It is also looking at coal-based power projects in Oman, consultancy business in UAE, and some of the other countries where NTPC is looking to expand are Myanmar, Vietnam and other Gulf regions. Now, we wrote to NTPC with regards to their global expansion. NTPC has said that yes, they are looking at expanding projects in these countries of Morocco, UAE, other Gulf countries, Myanmar, Vietnam, but at this stage they cannot specify the quantum of capacity that they are looking at. Back to you.
All right, thanks, Anshu. So NTPC is on the prowl, and we'll slip into a breather on Business Lunch right now. But before that, remember, dear viewers, that the new rules for DTH and cable have come into effect from the 1st of February. To keep watching India's #1 English business news channel, CNBC TV 18, just call your cable or DTH operator and ask for CNBC TV 18 only for ₹4 per month.